What's up guys, in today's video I'll be explaining to you why it's the easiest time for you to be trading prop firms successfully if you actually know what you are doing in the markets. Now just to give you context, I've been trading for about 7 years and I didn't achieve profitability until my third year transitioning to my fourth. Because of many reasons, maybe lack of mentorship, and let's just say it took a lot of time to do self-development in terms of my psychology, my mental resilience in the market, etc. But long story short, from my fourth year, it's when I transitioned from trading my small personal accounts into the prop firm space. And I did have a couple of failures, I think about 5 to 6 accounts, which I lost when I started trading prop firms, even though I was profitable back then on my personal accounts. And fast forwarding to now when I've been trading prop firms for about a 3-year period and got to a point where I'm trading successfully and living off the profits I make from my prop firm accounts. Now with my journey, I've been able to see prop firms from 3-4 years ago versus now, and there's been a very huge difference. Back then the conditions were very difficult, and if you compare the conditions to right now, you'll notice that the conditions are very favorable to a trader who knows what they are doing in the market. Myself, in the last 4 to 5 months in this single prop firm, I've been able to return about $12,000, and that is a very huge amount of money as compared to the investment that I put in getting the challenge accounts. I've also been documenting all this on my YouTube. In the recent video I did for you a live withdrawal, just to show you further proof of receiving the payouts. So currently in FundedNext I have 3 accounts, but 2 of the accounts I received them just within the last 1 to 1.5 months. So from the $12,000, about $6,000, which is half of the profit, has come from trading only one single account, which was initially a 50K account, and it's the one that has been running for the longest time, about 4.5 to 5 months. So if I scroll through here, you will see some of the payouts from this account, and the profits I've generated is about $6,300, and all of this is from a $50,000 initial balance account. Now for you to make $6,300, remember this is 80% profit split. So that means before the 80% split, I've made about $8,000 profit on this account, which is about 15-16% return. So the math I want you to do here is the $50,000 account. If you are getting it from the website, it will cost you about $300. And from the $300, I've been able to turn it to about $6,300. So if you are to do a percentage perspective, you've literally returned about 2,000% within a span of about 5 months. And you can do the math for any prop firm. This is just a $50,000 account. Let's assume you had taken a $100,000 or a $200,000 prop firm. So my point here is most traders don't even realize how much of an advantage we have trading prop firms. I personally don't know anywhere where you'd have put $300 within the last 5-6 months, and by now you've returned about $6,000, which is close to 2,000%. So the leverage you get from prop firms can be life-changing if you really have the right skill in the markets. Now some people will tell you that prop firms only give you a demo account. You see, at the end of the day, it doesn't matter as long as you are trading it like a live account and you're still getting your payouts. Whether you trade on your live broker, whether you trade on your prop firm, if your payout is worth $12,000, it doesn't matter whether you withdraw it from a broker on a live account or from a prop firm, as long as you still made the return and you have the skill. And even if you go to your live account, you should be able to replicate the same thing. So before I continue, let me introduce you to this platform, FastBull.com, which offers an economic calendar that can assist you to understand the economic events happening in the financial markets and how they are likely to affect you as a trader from a fundamental perspective. When you visit their site, they have a lot of nice features. In fact, compared to other similar platforms, you'll notice something like the financial data, which means the candles. There is no limit to the candles, while other platforms you'll notice sometimes there's a limit to the number of years you can scroll back. You can have up to 64 charts per tab. And one thing I have to mention is this is entirely free. You will not be charged for using their site. They have their charts where you can do your analysis. You can switch in your watch list between forex instruments, commodities, futures, indices, crypto. We have various tools of analysis, whether you want to do some technical drawings on your chart, you want to mark some levels, you want to come and measure the pips in terms of movement, and it's quite easy to navigate. You can also come and save your settings as a template, such that every time you open your chart, you find your custom settings. Not to forget, you can have more than one layout from this point, whereby you can compare more than one chart at a time. This should be very effective for your analysis. The last thing, in their main website, they have a signals page here where you can check top traders, weekly rankings, and the performance from various traders globally. So here's a very good example where you can see traders globally, you can see their returns, You can see their maximum drawdown, etc. So if there's something you can pick from this, the FastBull.com website will be very helpful. Find the links to their website and download their mobile app in the video description. Otherwise, let's get back into the video. Now let's go to why I'm telling you it's one of the easiest time for you to be passing prop firms and trading them successfully. You see, 2-3 years ago, prop firms had very tough conditions, and one of the toughest conditions was this here, which you needed to return about 10% in phase 1 within a 4 weeks period. And once you do that, you had to complete your phase 2 within an 8-week period. Currently, most prop firms have something called unlimited time or a no time limit. In FundedNext, they still have an account where you have phase 1 to pass within 4 weeks and phase 2 within 8 weeks. But you see, this is optional. You have a choice to go with the unlimited accounts. So if you go to FundedNext, the Stellar Challenge, you'll realize they only want 8% for phase 1 and 5% for phase 2. Back then, it used to be 10% was the industry standard for phase 1, and you had to achieve it within a 1-month period, 30 days. Now, the disadvantage of this is trading really doesn't work like that. There are months when the market isn't giving you an opportunity. A very good example is right now we are heading to the US elections. Personally, I'm quite inactive in the markets because of the conditions, because of the uncertainty that is likely to be as we head closer to the elections. Now, imagine having a challenge which requires you to pass within the next 4 weeks. Whether the conditions are good or not, it forces you to execute even if you don't have a nice trade in the market. A quick brush through from my journal this year, and if you look at my quarterly performance, in Q1, in January alone, I never returned 10%. Same thing to February, same thing to March. So if I was trading prop firms back then, I want you to see how difficult this would have been. Now, most of the firms used to have a condition whereby if the 30 days end for the phase 1 and you've returned something above 5%, you are allowed to have an extension of 2 weeks. But let's face it, you might still have a 2-week period where you don't have an opportunity in the market. So the whole idea of giving someone a time span to achieve a certain percentage works against the analogy of profitability in the market, because when you build your edge, it's based on a sequence of trades, and you cannot define how the trades will come in the market. Sometimes you might finish 1 month and you only found 1 or 2 trades. Sometimes you might finish 1 or 2 weeks and you found 10, 20 trades. So it is not you who has the control to determine how your edge will play out. So forcing someone to achieve a certain percentage within a limited time span clearly works against what makes a profitable trader in the first place. So if I was trading prop firms, there's a high chance I would have struggled in the whole of quarter 1, as you can see. So and then you move to quarter 2 and you notice the same thing. I only had 2% in April, 6% in May, and 12% in June. So if I'm taking a challenge, there's a high chance this is the only month I would have passed within the same 30-day limit. You go to quarter 3 and you notice a very, very similar thing. So then how were people passing prop firms back then? The thing is, passing prop firms back then required you to have either a strategy that can pass within 30 days most of the time, or you had to do sort of gambling to some extent, from the perspective of you just can't buy one prop firm challenge. You see, a good example right now, I've only been trading the challenges that I buy and I have no hurry. I can take a challenge for even 3-4 months before I pass all the phases, assuming the conditions are not working to my favor. But back then, I couldn't just go and buy one 50K challenge. So if I want to pass, for me to increase my chances, I had to buy something like 3 or 4 accounts, or at least have the funds to buy up to 2, 3, 4 prop firm accounts of the same size. So that if I take the first account and I start with, let's say, 1 or 2 losses, the next sequential trade I'll take on a new account which doesn't have any drawdown. Then instead of risking 1%, I'd end up risking something like 2 or 2.5%. So if the trade goes to my direction and I'm risking 2.5 with the risk to reward of a 1:3, already I've gained 7.5%. But you see, the thing is, sometimes you do this on 1 account, 2 accounts, and you are still not able to achieve that return. So you might find that you blew the first account, second account, then the third account is when you are able to risk a very huge percentage, like 2 or 3%. Then you get a 1:3 risk to reward, and you're able to pass your challenge faster. So passing prop firms back then included some bit of luck, which really wasn't favoring a profitable trader in the market, even if you have an edge. Also, back then we had very few prop firms, meaning there was very little competition. So there was a monopolistic behavior in the prop firm space. For example, right now I can easily look for a prop firm which allows news trading, a prop firm which has balance-based drawdown, and I'll easily find a nice prop firm. But back then we had very few firms dominating the industry, and all of them had very strict conditions. So finding a firm which even allows you to trade during the news was very difficult. Finding a firm which has balance-based drawdown was also a task. So you are only limited to what was available, whether it suits your trading style or not. Not to mention the fees to purchase a challenge was quite expensive back then. Now fast forward to 2024 when there's a complete turnaround. You can actually find a prop firm that suits the exact needs that you have. Whether you want balance-based drawdown, whether you want a one-phase instead of a two-phase challenge, you can sample through tens of prop firms until you find one that suits your needs. Ironically, as much as the conditions are looking favorable, the statistics are showing a very low pass rate, with only about 7% of traders earning payouts. 60% lose their capital, and as you can see from the ones who are passing, most of them attempt at least 3 challenges per account. Based on this website, 93% of traders don't even get to a payout. So they keep investing money into challenges and they keep losing their money. With that said, if you are struggling in prop firms right now, I want you to do a lot of self-reflection. How comes you're being told you can take the longest time to pass, but then you're still failing your prop firm within 1 week? You're still failing your challenge at the end of the month. There are a couple of reasons why you're failing too quickly. One of them is you're still greedy and you're trying to pass faster. That means you're using high risk. So instead of just being patient and executing with a minimal risk, when you find your setups, you're trying to risk 2-3%. Then in the process, you end up blowing your account very fast, even though you've been given the whole time in the world to do your challenge. The second possible reason you are losing is because you just had a bad month, maybe, or you had a bad trading period. There are seasons in the market when the conditions are just terrible and you might have an edge, you do everything correctly, but because of a losing streak, you end up losing your account. But there's nothing that you did wrong according to your system. Now, such case is an exemption because it means if you keep executing in the next consecutive months, you should be able to pick yourself up and pass your next challenge. The third possible reason you're losing is because you just don't know what you're doing in the markets. You completely don't have an edge. You've not taken time to build a proper knowledge foundation as a trader for you to understand your price action in the markets, collect data and build a model that is profitable and proven. So you're just going to the market trying to do some guesswork, trading from an emotional perspective with high expectations that somehow you'll find a lucky trade which wins you your challenge and you make some payout. Most of the time, this type of trader is taking a prop firm challenge because of hype. You've just seen your fellow traders online taking challenges, doing payouts, but you've not understood how much they've built themselves first. You're not familiar with the level of discipline they have in the markets, the psychology that they've already built for themselves, the mental resilience they have because of their experience. So you're just trying to do the same thing they are doing without actually putting in the work first. And in the process, you end up treating your prop firms like some casino. So as a trader, you need to do some self-reflection and ask yourself, if I'm failing, then where do I lie amongst the three? Keep in mind, I'm not telling you any of this to condemn you because my trading journey involved all of these cycles. I did these mistakes for a very long time and I got to a point when I had to take my trading seriously and treat it like a professional business. That's why I'm trying to tell you this so that you don't waste time imagining that there's an easy way out through trial and error. So as you do some reflection, if you're the first type of trader who is losing because you're impatient and you're using huge risk management, but you have an edge in the market, then your work is simple. You just need to take time to build your psychology and do some self-development. I'll advise you to always start small with a prop firm account that you can afford to lose. When you start with a small account, it assists you to build your psychology in the market as you grow. Myself, I've traded 5K account, 6K, 10K, 20K account, $25,000 account, 50,000, and right now I'm managing about $200,000 in capital, looking to scale to $1 million in the next few months. When you lose 1% on a 5K account, it's only $50. But with the capital I'm trading right now, when I lose 1%, I lose close to $2,000 on a single trade. And of course, the same applies to the profit. You now make significant amount of profits. But when you start small, you're able to go through the step-by-step journey and allow your emotions and your psychology to grow over time. That way, when you get to a point when you're trading a big account, it's something that you've grown into and it becomes easier to manage yourself in the markets. If you're the third type of trader who doesn't have an edge, whether you like it or not, you just need to stop buying prop firms because of the hype. Take time and go to develop yourself as a trader first. Do a lot of practice in the markets, understand what the markets are doing. Try to find a few favorites in terms of the pairs or instruments. You can select 1 or 2 markets that maybe you see you are understanding their movements more. Try to focus on them, test them from different time frames, apply different price action concepts, and before you realize, it will be a matter of time before you can start to find something meaningful in that market. With trading being a skill, it requires a lot of practice. I can't overemphasize enough how much the more you spend time in the markets, the more likely you are to understand what is happening, the more likely you are to get to a point when you can build a working model in the market. Everyone can have the knowledge in the market. Everyone can understand price action. But getting to a point where you can put it all together just requires practice. Just by going through my YouTube channel alone, you'll come across so many videos in terms of price action, me showing you my strategy, my entries. But ask yourself a question, why can't you do the same thing? How comes you watch my videos of price action, but you go to the market and you can't see the same thing I'm seeing? It's that I've been in the market for a long time. I've practiced so much. So it gets to a point where when you open any chart, your eyes are so familiar to the movement until you can just spot something happening. You can spot some patterns. You can spot the structure heading to a certain direction. You can spot whether we have a retracement, whether we have a key level. It becomes something very natural to your eyes and you don't struggle, unlike someone who hasn't put in a lot of time practicing in the market. So there is no other way. You really have to commit. Think of this from a long-term perspective. When you get to a point when you've built $1 million in capital, you'll be proud of the time you took to develop yourself. Right now, I'm 7 years into trading, but I don't regret, because in a single trade, if I'm risking 1,700 across my accounts to just do 3%, 3R, which is 3% on my account, I'm looking to make about $5,000 in one single trade. So I can't look back and start to regret because it's taken me 7 years to get to this point. So I'm telling you this to give you some motivation that trading is worth putting in the time. Don't approach it from the hype mindset where you're just trying to be lucky, then you'll be here for the next 5-6 years with no positive progress in your trading. I always say, if possible, do some side hustles. If you're still working and you're learning trading at the same time, don't be quick to quit your job, because for you to really build yourself in the markets, it takes a lot of time. Don't be in a hurry. Keep doing your job as you learn. Keep doing your side hustles as you do your PropFirm challenges, as you develop yourself. But if you don't have any other source of income, you end up pressuring yourself into trying to achieve the success so quickly, and in the process, you actually miss it. The final tip I'll give you guys is use the last quarter of the year, or the last 2 months of the year at least, to prepare for your next trading year. A good example is myself. The performance you've seen from me this year is a result of a lot of work I've put in the years. But I also have to give credit to myself for the last 2-3 months of 2023, where I spent a lot of time backtesting, looking at the markets that, are my favorites, trying to spot some patterns. And it's actually a headache sometimes, because you backtest for a whole year and you don't find anything meaningful. You backtest the 15-minute time frame, you don't find anything profitable. You have to try a different time frame. But then you see, it helps you to have a grip of what you are doing in the market, what to expect, how your system is working. If there are any errors, you want to modify them at that point in time. So by the time we were starting 2024, I was only implementing a system that I've already developed and is working efficiently. So anytime you're seeing a successful trader, anytime you're seeing a trader who has the performance that you admire, you also have to admire the work that they put behind the scenes. Don't just be excited to see results and think it comes easy. You really have to put in the work, but as I've told you, it's more than worth it. So that's it for this video, guys. Until next time.